Beginner's Guide to Machine Learning Finance Strategies. Explained simply, machine learning has completely changed the way finance works. From how hedge funds make billion-dollar decisions to how everyday investors like you and me can grow our wealth smarter and faster. The truth is, you don't need to be a tech genius or a Wall Street insider to use it. You just need to understand how it works, why it works, and how to apply it step by step. So in this video, we're going deep into the world of machine learning finance strategies. Explained simply for beginners. By the end, you'll understand how machines can help you make better financial decisions, manage risk, and build a smarter investment portfolio. Let's start with the basics. What exactly is machine learning in finance? Machine learning is a type of artificial intelligence that allows computers to learn from data, find patterns, and make predictions without being explicitly programmed. In the finance world, this means algorithms can analyze millions of data points, things like stock prices, interest rates, news headlines, social media trends, and even weather reports to predict where markets might move next. Imagine having a digital assistant that processes information from around the world 24/7, never gets tired, and learns from every mistake it makes. That's the power of machine learning in investing. Now, here's where it gets really interesting. Traditional investing relies heavily on human intuition and emotion. People buying when they feel confident and selling when they panic. But machine learning models don't feel fear or greed. They make decisions based purely on data. This means they can detect patterns that human investors often overlook. For example, machine learning can find subtle correlations between different stocks, or detect early signals that a company might outperform or underperform. These insights can help investors build smarter, more data-driven strategies that reduce risk and improve returns. So how can you, as a beginner, start using machine learning finance strategies? The first step is understanding data, because data is the fuel for any AI model. You don't need to collect your own data. There are tons of platforms and APIs that offer market data. Tools like Yahoo Finance, Quandel, or Kaggle provide free or affordable access to real financial data. Once you have access to that data, you can use beginner-friendly tools like Google, Colab, Python, or even AI-powered investment platforms that do most of the heavy lifting for you. One of the simplest ways to get started is through predictive modeling. Let's say you want to predict whether a particular stock will go up or down next week. You can feed a machine learning algorithm data about that stock, things like its past prices, trading volume, and company news. And the algorithm will look for patterns that historically led to price increases or drops. Over time, it improves its accuracy as it processes more data. This type of model is already used by institutional investors to identify potential opportunities before they hit mainstream awareness. Another key strategy in machine learning finance is portfolio optimization. This involves using algorithms to automatically decide the best combination of assets to hold based on your goals, risk tolerance, and time horizon. Think of it as having a smart portfolio manager that constantly adjusts your investments to maximize returns while minimizing risk. Some robo-advisors, like Wealthfront and Betterment, already use these techniques, but advanced investors can create their own models tailored to their personal goals. Then there's risk management, one of the most powerful uses of machine learning in finance. Traditional risk models rely on historical averages or human judgment, but machine learning can dynamically adapt to new conditions. For example, it can detect unusual volatility, track global economic indicators, and even spot early warning signs of market crashes. This allows investors to take protective action before big downturns happen. Now, here's the part most people miss. Machine learning isn't about replacing human decision. It's about enhancing it. The best investors use machine learning as a tool to supplement their strategies, not as a replacement for research or common sense. AI might help you identify potential opportunities, but human intuition is still important for understanding context, like how government policy or consumer behavior might shift the market. Let's take a quick example. Suppose an algorithm identifies a positive trend in electric vehicle stocks. A human investor might then research deeper, looking into whether there's new legislation, supply chain improvements, or consumer demand backing up that data. Combining machine intelligence with human insight creates a powerful balance, but that's where the best results happen. If you're serious about applying these strategies, here's a simple roadmap. Step 1. Learn the basics of data and machine learning. There are tons of free courses online that teach you fundamentals without coding experience. Step 2. Start experimenting with simple data sets. You can use spreadsheets or pre-built AI tools that visualize predictions and trends. Step 3. Track your progress. Record your investment decisions, predictions, and outcomes so you can refine your strategy over time. Step 4. Stay updated. AI and finance evolve fast, and new tools are released almost every month. Keep learning, adapting, and testing. Here's a bonus tip. Don't get caught up in the hype. Just because something is powered by AI doesn't automatically mean it's better. Machine learning systems are only as good as the data they are retrained on. If the data is biased, incomplete, or outdated, the predictions will be too. So, always verify your results. Use diverse data sources, and remember that no system is 100% accurate. The goal isn't to be perfect, it's to be consistently better than before. Now, let's talk about why this matters for you as a beginner investor. Machine learning is leveling the playing field. What used to be available only to hedge funds and financial institutions is now accessible to everyday investors. Whether you're managing a small portfolio or just starting with a few $100s, you can now use AI-powered platforms that make data-driven decisions for you. The earlier you understand how these systems work, the stronger your foundation will be for long-term financial growth. If you've ever felt like investing was too complicated or too risky, this is your time to take control. Machine learning can simplify complex data, reduce emotional mistakes, and help you make smarter financial moves. You don't need a PhD or a Wall Street job, you just need curiosity and consistency. Every great investor started as a beginner, and today AI gives you an edge that generations before us never had. So, if you found this breakdown helpful, make sure to hit the like button to support the channel. Leave a comment telling me what part of AI investing you want me to explain next. Maybe predictive models, sentiment analysis, or algo trading. And don't forget to subscribe to the channel and turn on notifications so you never miss a new video. The world of finance is changing fast, and the people who adapt early will be the ones who build real wealth in the future. Let's grow smarter, not harder. Together.